This is Jim Hayerchek with this week's Autochartist weekly Forex futures and equity market recap for the week ending June 15, 2012. Shift in investor sentiment from safety into higher yielding assets encouraged traders to move money from the Japanese yen into the US dollar early last week, making the US dollar Japanese yen, or symbol USD JPY, the Forex market to watch early in the week. Saw the dollar break out above the yen, looking for a target price of 80.01. Later in the week, when demand returned for higher risk assets, that weakened the dollar and strengthened the yen, and that's why we had this sell-off late in the week. This move is likely to continue if the central banks intervene in the euro market over the weekend because of political events in Greece, and that should make the dollar weaken against the yen. However, traders should be aware that the Bank of Japan may try to defend the yen at the same time to prevent it from getting too expensive. So the US dollar Japanese yen should be a volatile market in the upcoming week. Another market that we were watching was the gold market. This market began to show signs of support near this 1527 area. You can see that this low goes all the way back to January. The market found support there. Now, if the dollar weakens next week, this market's likely to move higher. So we are looking for a potential move to about 1641 on some of the smaller term charts. But this chart indicates that there's plenty of room to the upside in this rectangle pattern. So gold is definitely a market to watch. So that's going to carry over from last week into this upcoming week. So it looks like a breakout above the 641 area could trigger a pretty strong, a pretty healthy rally. There may be some choppiness because of these old tops near 66, 67, 77, and near 1697. However, once this area is cleared, it looks like the gold market has plenty of room to the upside. And again, we expect volatility in gold, especially because of the Greek elections over the weekend. There is still some uncertainty in the marketplace. But again, if the dollar weakens because of an intervention by central banks into the euro, then we'll definitely should be looking for some upside movement in the gold market. Later in the week, we are looking at the euro dollar, US dollar, and this market showed a potential upside breakout. We had a breakout earlier in June, first week in June, that carried over into last week. We did see a gap higher early in the week and then a failure, but the market was able to sustain support around 124.45. As we finished the week, there was a little bit of euphoria in the market as traders began to believe the story circulating that the central banks were going to intervene, and that gave the euro some strength and set it up for a potential rally, the potential rally to continue back to this Autochartist target zone at 127.54. So again, this euro dollar chart started out higher last week, broke back down, and now closed on the highs, and that gives it some upside momentum to start the week higher. So we'll be watching that, and that move should carry over as I explained, because of the possibility of an intervention. And finally, we ended the week looking at the commodity market, in the cocoa market. And the cocoa market was showing signs of a potential breakout. We did see this breakdown to the downside fail, and then the market quickly regained support and began to mount a pretty strong rally. So we're looking for a possible move slightly above the 2300 area, and then from there we could break out even further. If you look at the most recent cocoa chart that we looked at late in the week, you can see in this chart that we have an emerging pattern that shows there's plenty of room to the upside despite these up and down movements. This is just the establishment of a support base. So we're fairly positive on the cocoa market. Finally, if you do look at cocoa from a longer term perspective, this market does have potential to move higher. because of demand for commodity prices. Another signal we were looking at last week in the euro market was the Gartley pattern that had formed. And this pattern here indicates that this market is on track for a move to the 129.04 price target. So late in the week, we had identified this along with Autochartist for a potential move into 129.04. Again, this type of action with the sharp sell-off, the short covering, and then the new buying down here around this 124.50 area could give the market the boost it needs to reach 129.04. So overall, we're looking at volatility next week because of the Greek elections. We're looking at the possibility of central bank intervention, which should weaken the dollar, strengthen the euro, and also strengthen demand for higher risk assets such as gold, crude oil, and stock indices. This has been James Hyrechek with this week's Autochartist weekly Forex futures and equity market recap for the week ending June 15th.